Guys, I hope everybody's good. Um, okay, guys. Doesn't want me to be on the landscape, so I'm just gonna kill it now, guys. Just gonna go to it. Let me see if there's someone in the building. Let me see if there's someone in the building, guys. But today we're gonna be talking about one of the most important topics ever, which is time frames to trade in. Why did I touch more in this topic? I'm just gonna be broad, and I think I have something here. Okay, guys. Sorry about that. I'm just gonna be broad, guys. With this topic, I'm gonna talk about everything that involves this topic, starting from like identifying and knowing yourself as to what kind of a trader are you, what is it that works for you, and what is that doesn't work for you. So we're just gonna start there and see. Let me see. Let me see. I wanna see, guys. I wanna see, guys, if there's any live. Okay. I think it's um yeah. So I wanted to check the comments here to see if there's anyone in the building. So basically, today's topic, guys, it starts with one of the most important things in the industry or in the game of trading, of which is knowing yourself, knowing what works for you, and knowing what doesn't work for you. So what do I mean by saying that is that you can be like, okay, I want to be a scalper, I want to be a day trader, I want to be a swing trader, or a position trader. You can all want those things. We all wanted those things when we were starting. I wanted to be a swing trader when I started trading. I've always loved being a swing trader, but only to find out that along the journey I moved from being a swing trader and to being what to being a day trader. So what does that mean? It means that I was able to know myself, to find myself along the journey of trading, to say, okay, I am this type of person. I work most effective when I'm day trading more than when I'm swing trading. I'm not good with holding trades over weekends. I'm not good on holding trade more than 3 weeks. I'm not good with that. So it didn't really work for me as much as it's something that I loved, but it didn't work for me. So it all goes down to knowing yourself. That is why I'm saying, guys, this is gonna be very important, because now you're identifying yourself as to what is that works for you and what is that doesn't work for you. And then you try by all means to capitalize on that works for you. So now looking at time frames to work with, obviously, guys, it goes to different type of, like, what type of a trader are you? Are you a day trader? Are you a swing trader? Are you a scalper? Or you are a position trader? So let me just start with being a position trader, even though I don't have much experience with position traders as to how do they go about the whole process, because like I'm more focused as okay, like when I started trading I was more focused as to I'm a day trader. I'm a swing trader, I mean, and then I evolved to being what? To being a day trader. So I wouldn't know much about about position trading, but I know that people who are position traders, they enter those positions for, like, they can enter today and look to exit 6 months or a year from now. I know that for a fact they hold their position for the longest time. So now, if you're a position trader, it's best that you start from probably 6 months time frame going down to quarterly time frame. So on 6 months time frame, you're trying to find as to where has the market has been going for the past 6 months, where the market has been going for the past 2 years. You're trying to find out the overall direction as to if you wanna trade, with the momentum, you wanna trade where the market is going. Obviously, to find reversals, to find those reversals on bigger time frames, it's gonna take time for you to find those reversals, because of for market to create a double top formation or double bottom, whatsoever you call it, it's gonna take even years, because of we are on maybe 6 months time frame, so it can take even years. So you see that it's gonna take more time for you. So you've got to also involve what you've got also to involve fundamentals to know what fundamentals are saying longer term, how the market is looking in terms of economy, what can push this pair up or down. So those kind of things, they do really help, especially when you're a fundamental, when you're a position trader. They do help a lot to make you be aware as to now we might be looking for a change in trend, we might be looking for a change in direction early. Because of, why am I saying that? Because of, if you are looking for patterns in like 6 months time frame, you eventually gonna wait for like for the whole year not finding even one position, because of, we are talking about 6 months time frame here. So they really do help a lot. So yeah, you just draw down. Because of what I normally do, I like to do what is called top down analysis. Why I like to do top down analysis? Top down analysis, it helps me with confluences of time frame. Like time frame, they have to speak the same language, they have to speak the same codes. Like I cannot be on my weekly time frame. My weekly time frame is telling me to buy, and then my daily time frame is telling me to sell, and then my 15-minute time frame is telling me to do other things. So you see that now all these time frame, they are contradicting themselves. So what I best do in that case, I stay out of the market, because of the market isn't stable, is not moving in a way that I want. So what I want those time frame to speak the same language. I want them to speak the same code. I want them to say the same thing. I like the confluences of them, like they have to like go in handy. So if on 6 months time frame I saw that there's a push to the upside, probably a beginning of an uptrend. On quarterly time frame, or when I go to 3 months time frame, I have to still see those moves to the upside. Even if maybe there is a bit of retracement or a pullback, I tend to maybe plug my Fibonacci there, and then you're gonna see that it fits well to say this is not a move to the downside, but it's just a retracement to just because of, the market doesn't just go straight up. What it does, it just goes in like zigzag, zigzag, zigzag. So I hope you got that part. But what I'm trying to say, guys, is that time frame, they have to like accommodate each other. They have to speak the same codes and same language. So when you are on a quarterly time frame, let's say now on a 6 months time frame, you saw that the price was moving to the upside. Probably maybe you saw a reversal pattern there, or you saw some sort of supply or demand, whatever you call it. I don't use supply and demand, I use support and resistance. Probably you saw a support area there at the bottom. But I believe supply and demand and support and resistance is more of the same thing. It's just that maybe they're using fancy words to call it, and including those things of order blocks, just that they're adding some bit of more rules to it. But I believe like it's more of the same thing. But the basics, it's support and resistance. Everything starts there. So maybe there's a support, there's a key area, then price start to push to the upside. And then when you draw down to your quarterly time frame, you're gonna see that price is now doing what is pushing a bit to the upside, even if it's pushing down, but it's just a retracement, it's not the real move. You just plug in your Fibonacci, then you're gonna see that the price is not really pushing to the downside, but it's just a retracement. So now we push even further down to what, to our monthly time frame. So when we go to our monthly time frame, what is that we're looking for? We're still looking for those moves, we're still looking for those entries, because of, you can enter on a monthly time frame if you're a position trader, to say, okay, this is where I'm finding my entry. Probably you won't be focusing much on candlestick confirmation, because of, you might not get any, because of, it takes a long time for one candlestick to form. But you can still wait for candlestick, because of, I know one thing I know about position trader is that those people, they are so patient. They can wait and they can hold the position. Once they're in the position, they know that they're gonna look to hold for that position for the longest time ever. So yeah, it is what it is, guys, there. And you can also draw down to your weekly time frame, but I do believe that that's the last time frame you can go to if you are if you are a position trader, to see maybe if you get some candlestick confirmation on a weekly time frame. You can get those candlestick confirmation and see maybe if you do get some those double bottom pattern there in those key areas and so on, those type of thing. But then those time frames are the ones that are suitable for what, for position trader. You cannot be looking at quarterly or yearly time frame while else you know that you are a scalper or you are a day trader. You can, those things, they're not really more valuable to you, according to my own opinion. Obviously, someone else out there have their own beliefs as well on this type of situation as well. So going to being a swing trader, uh, being a swing trader, guys, is very very flexible and is very very nice, especially when you have a 9 to 5. If you are a 9 to 5 job, then swing trading is very, because you check your charts maybe 3 or 4 times a day, and then you're done. Maybe every after 4 hours you check your chart. Probably maybe for if you are waiting for an entry, you can do that every after 4 hours. You check your chart to see if you do get an entry. But once you execute, you're gonna check your trades maybe after a day or whatsoever, just to manage the trade, because of it's gonna take longer. It's gonna take almost 16 hours to start seeing move. And even if those kind of things, they are still consolidating, you can still like be like at the entry, so it's gonna take longer. So it's good for 9 to 5 people. If you're a 9 to 5, then it's good. For me, it wasn't suitable because of hours at work. Like I'm working like I'm a 9 to 5, but I'm a trader. And my 9 to 5 is forex, so I spend all my time like looking at the chart. So waiting like 4 hours to execute a trade, it wasn't gonna make a lot of sense. Whereas I have the whole day to look at the chart. Not to say because I'm looking at the chart, I'm executing each and every position that I'm taking. So when you're a swing trader, guys, being a swing trader, you start from when I was a swing trader, I used to start from monthly time frame, just to see the overall direction as to where the market is going from my monthly time frame. And then I'll also draw those major key areas, trend lines. I used to trade not using support and resistance back then. I used to focus much on trend lines. Yeah, I used to focus much on trend lines back then at the time. But you do know, guys, that with time you do evolve and tend to be someone else in the market, because of you tend to find yourself, get your inner self, your self awareness, and all those things along the journey. So I tend to evolve as well, but we're not the I'm at the point whereby I used to draw my trend lines. I'll literally zoom my chart, zoom out my chart, like, or I'll zoom in, I'll zoom out. I'll zoom out my charts to make them so small so that I can be able to draw my trend lines as very, very nice. And then once I zoom out my chart, I go down to my weekly time frame. On my weekly time frame, I still wanna see that move to the upside, even if I do see a bit of retracement to the downside. But I wanna see if it's still fitting my Fibonacci, if it's still fitting my market structure. Because of, guys, no matter what, market structure is king, guys. You have to like follow market structure every time, all day, every day. Because of, if you are trading and then maybe you are looking for you are bullish bias on maybe, let's say, on USDT, because I love USDT. I'm trading USDT a lot. Maybe you are bullish, then USDT suddenly break the structure from the upside to being making lower lows and lower highs. But you cannot be looking for buys if the market is making lower lows and lower highs. So the structure has been broken. So you need to also look for that on a weekly time frame to say, okay, the structure hasn't been broken. So okay, guys, I think I lost. But just to continue where I left off, um, just to, I don't know what's happening, guys. It started to count down. I don't know what happened, guys. I don't know. I'm trying to find out. I'm trying to find out what's happening. Sorry about that. Okay, I don't know what's happening, guys. I don't know what's happening. I think the video cut it itself while it disconnected. But to continue where I was explaining, to say, you look at the market structure, because market structure is king, guys. Like if you are looking for higher highs, higher lows, higher highs, higher lows, just know that once price breaks those higher highs and higher lows, then you know that the structure has been broken. Now you might change your bias from being bullish to being bearish. So now going to daily time frame. On my daily time frame, I used to like On my daily time frame, I used to confirm the structure as to is the structure still well, and then I'll adjust my I'll adjust my trend lines as well, because of, when you're drawing from bigger time frame, you still need to go to your smaller time frame. I'm not saying daily time frame is a smaller time frame, but lower time frame, just to manage and adjust the trend line to fit perfectly. So what I basically do, I'll just adjust my trend line to make sure that sometimes you can think, oh, this was a breakout, only to find out it was not a breakout, but you misdrew your trend line. So to a point whereby you put it in a place whereby you thought it was a breakout, only to find it wasn't a breakout, you just misdrew. So I make sure of those cases to say, when I'm drawing my trend line, I used to make sure that when I'm drawing my trend lines, they are as accurate as possible, no mistakes there, no cap, like as accurate as possible. And then moving from there, I'll go to my H4 time frame. On my H4 time frame, I used to like look for candlestick confirmation. I used to look for candlestick confirmation, like bearish engulfing, bullish engulfing, doji candlestick, harami, morning star, evening star, and so on, those type of but at first I didn't like wanna confuse myself with a lot of like candlestick confirmation, because if I was still new. I'll just literally focus on doji, rejection candlesticks, and bearish and bullish engulfing, and then morning and evening star. Those type of harami candlestick, I wouldn't focus much on them. I wouldn't focus, and choose a bottom, choose a top. I did sometimes focus on them, because of they tend out to play the most. But guys, just don't confuse yourself with like a lot of information, lot of candlestick confirmation to know, like a lot of like, just focus on the one that works most effective for you, and then kill from there. And then that's when I'll be like looking to have my stop loss maybe 50 pips, and then I'm looking to target 150 pips or 200 or 250. But I was like, my minimum is like 1:3. I don't go below that. If the trade is not giving me 1:3, then I'm out. I'm not taking that position. I'm waiting for a better trade to present itself, because of like, I felt like, to me, it was useless to target 1% in a position. Sorry about that, guys. I felt like it was useless to target 1% in a position for me. But yeah, that's when I was taking my positions on H4 time frame. But going down to my my day trading, of which is what I'm doing currently, I love it. Like, I love it a lot. I'm day trading now. So basically, when I'm day trading, I look at my daily time frame. Not much on my daily time frame. I just look at the key areas, just to put in my lines there to say, okay, here I have excuse me, I have a psychological level. I have a psychological level here. I have a psychological level here as well. Then I throw. Then I drive into my H4 time frame. I focus more on H4 time frame, guys. On H4 time frame, I look for where the market is going. Where possibly can the market go for, like, today? Where is the market can go today? Sort of things. That those are the kind of things that I focus more on, as to where can the market go today? What is it that I'm looking at today? I'm looking for buys, I'm looking for sales. Those kind of questions, you have to ask yourself those kind of questions. If you're looking for buys, where is my support? Where am I looking to enter those positions? Because of, even if you're looking for buys, you cannot buy at the resistance. You need to wait for price to retrace a bit, give you some sort of like structure, and then you sell, you buy at the support. You can never buy at the resistance, or you rather wait for price to break that resistance and come back forward for a retest. Then that's when you enter the position. I go down to my H1 time frame. On my H1 time frame, guys, that's when I throw my zones. Remember, on my daily time frame, I was throwing lines. Then on my H1 time frame, I throw my zones to say, okay, this is my zones. Taking from, it depends on which one I prefer at that time. Sometimes I take the candlestick spike, or sometimes I take the candlestick body. It all goes down to what I prefer at that time. And when I'm looking at the price, as to if I'm taking the candlestick body, do I experience a fake out in the present? If yes, then I have to take the candlestick what spike, because of, I don't want to find myself in a situation whereby I'm thinking has broken above, only to find that price did not break above. So I don't wanna experience myself in that situation. So continuing, I go down to my 15-minute time frame. So on my 15-minute time frame, guys, what I basically do, I just execute, putting my stop loss like 15, 20 pips. and then I know that I'm looking to target like 30 pips or 45 pips. I don't target a lot with day trading, to be honest. Like I'm just looking for like 1:2. Like 1:2 is my first target. 1:1, I just make sure that once price reach 1:1, I move my stop loss to break even. 1:2, I take my profit or I take my partial. If I feel like price has more potential to go to the downside, then I can just take my partial and leave the other trades running. But I make sure that at 1:2, I take something, 2%, I take something of the position. I don't like just let the trade land. I take something, I just know that, okay, even if the trade do reverse or retrace, I'm safe. I didn't give back the profit to the market. And then yeah, that's basically what I basically do when I'm day trading. uh Scalping, I wouldn't talk much about scalping, guys, because I'm not a scalper. I've never taken a trade on 1 minute time frame. I've never taken a trade on 1 minute time frame. What I basically do with scalping, I wouldn't say it's scalping. I would say it's scalping because of I take maybe like 5-10 minutes one trading USD at 3:30. I would say that's the sort of scalping, but I use the same method as I told you guys when I was doing the day trading analysis. I use it's the same process that I go through to look where to the market is going, through my key areas, the same process. But the only difference is that now at 3:30, I don't put my take profit, I don't put my stop loss. What I know is that once price reaches this is price once price reaches this area, I close. Whether I'm on profit or I'm on loss, I close. Once price reaches this maybe I'm buying at the support. Once price breaks and closes below that support, I'm closing. Once price pushes above and reaches the closest resistance, I'm closing. So I know that this is where I'm closing, this is where I'm holding. I know that this is where I'm closing, I am entering. So it's so fast, like it can take even 5 minutes. Like I can just enter now, 5 minutes, I'm done. So basically that's what I do, but the whole process is still the same. It's still the same as day trading. I still follow the same procedure as day trading. Nothing has changed. So basically, guys, I believe you did find this video interesting because of I was explaining to you how to go about timeframes, what to look for on timeframes, and how to go about, maybe if you're a position trader, if you're a day trader, if you're a swing trader or a scalper, what timeframes to focus more on instead of you trying to look at the 6 month time frame while else do you know that you're a day trader. It just never gonna work for you. So yeah, guys, it is what it is. But thank you so much, guys. Make sure that you also subscribe on this video. You drop the like and you comment as to what you think about this video. I'm not sure if you're gonna be able to get the other clip, because there was another clip about 12 minutes explaining. I think it's still there, explaining about swing trading and position trading. I believe. Yeah. So yeah. Thank you so much, though, guys. It's your boy